This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks keep making new highs as investors feel more confident about inflation and interest rates. The S&P 500 traded above 5150 for the first time, but inched lower to end last week down 0.3%. The Nasdaq 100 traded similarly, with chip stocks like Nvidia shooting to new records before reversing lower. Small caps and mid-caps advanced. That could suggest a long-awaited rotation away from mega-cap growth stocks has begun. Federal Reserve Chair Jerome Powell spoke to lawmakers on Capitol Hill last week. He said that interest rate cuts can and will begin over the course of this year if inflation continues to improve. He added that policymakers are not far from being confident that inflation has eased enough for easing to begin. As a result, the market now expects the first rate cut on June 12, according to CME's FedWatch tool. The European Central Bank separately indicated it may start easing around the same time. Rate cuts are often good for stocks because they support risk appetite and reduce the appeal of keeping money in bonds. They also increase the importance of tomorrow morning's Consumer Price Index, or CPI, which is the government's first reading of inflation in February. Other economic events last week supported lower interest rates. The labor report showed higher unemployment and slower wage growth. Overall hiring beat forecasts, but previous numbers were revised lower. Service data showed milder price increases. Labor productivity was also better than expected in the fourth quarter, according to updated numbers from the Bureau of Labor Statistics. Semiconductors like Nvidia were best performing major industry in the last year, according to TradeStation data. They continued higher last week, climbing more than 8% through Friday morning. But then they reversed and surrendered most of their gains, as the excitement around AI finally starting to fade. By the time the dust settled, the biggest gains were in groups like gold miners, banks, and utilities. Those may be helped by interest rate cuts. The Russell 2000 Small Cap Index also closed at a 23-month high. Some strategists have also said they could benefit from rate cuts. The S&P 400 Midcap Index, which focuses on traditional sectors like industrials and retailers, closed the week at a new all-time high. For the first time since November 2021, the pattern of record weekly closing highs occurred in the other indexes, like the S&P 500 and Nasdaq 100, as they broke out. Could mid-caps follow? Two of the biggest gainers in the S&P 500 last week were retailers with wider profit margins. Kroger beat earnings estimates by 18%, despite revenue coming in line with consensus. Target's earnings surprised by 23%, despite revenue missing by 1%. That kind of profit improvement is boosting stocks and market valuations. FactSet noted that analysts see profit margins widening from 11.2% last quarter to 11.6% this quarter. FactSet also reported that the fewest index members mentioned the risk of recession in 3 years, based on a survey of conference calls. That could also lift optimism and suggest earnings will get stronger. Albemarle fell the most in the S&P 500 after selling shares to finance capital spending. The move highlighted concerns about a worsening lithium glut amid weak sales of electric vehicles. Last week was interesting because gainers in the index outnumbered falling stocks by about 5-3. Even with the indexes down slightly, the kind of improving breadth is a potentially bullish sign of widening participation in the rally. The advanced decline line also made a new high on Friday as the broader market fell. Value stocks rose about 1% last week and are now outperforming the broader market over the last month. Growth stocks, which include AI names and technology, fell about 1%. That's another potential sign of investors rotating away from big Nasdaq companies. Some of the price action last week also resembled some recent trends since the rally began in early November. For example, the S&P 500 bounced last Tuesday at 50.57, roughly the same level where it bottomed 5 sessions before. So you have tight movement, holding recent lows instead of falling more deeply. Activity like that could indicate buyers outnumber sellers. Some traders may also notice how the 8-day exponential moving average has stayed above the 21-day exponential moving average since early November. That can also reflect a bullish short-term trend. And now let's check out some events this week. Oracle reports earnings this afternoon. Tomorrow's February Consumer Price Index, or CPI inflation report, is probably the most important event of the week. It's scheduled for 8:30 Eastern Time, 1 hour before the stock and options markets open. Dollar Tree and Lennar issue results on Wednesday. Crude oil inventories are also due. Thursday features the Producer Price Index, or PPI, inflation report, plus retail sales and initial jobless claims. Dollar General and Adobe are two of the big earnings reports. Consumer sentiment is on Friday morning. Thanks for watching. Please visit tradestation.com for more.